What if I record every single trading day of my life as a professional trader for record purpose and for educational purpose? Guys, I promised you guys that I'm going to record every single trading day of my life for you guys, both the positive trade, the negative trades, and then if the trade later goes in my direction or whatever the reason. So today the same thing happened. Today's trade happened to be positive, and then I use the balance price range entry model for this particular trade. Now, this is something I called even before now. I shared it with the community guys in the early trading community. I actually had a Zoom session with them, just some few minutes, and then we took this particular trade together. All right. So this was when I actually called the trade. I say, guys, the trade is ready. And then those who were ready got into the trade and we made money together taking this particular trade. So let me go through every single step I use for this particular analysis. It's straightforward. As I told you earlier, make sure that your analysis is always straightforward and anyone can understand. Make it easy for you to trade and don't stress yourself. Don't make it complicated. So what I did was that I went to check DXY. All right. So DXY is very important when it comes to checking directional bias. It's important you do this every day. So I came to DXY, the 4-hour time frame, and I discovered that on DXY, there is a liquidity above here. This was what I saw. There was an order block right there. And that was what I saw that made me to take the trade with confidence. So I saw that on the 4-hour time frame. And then I saw on the 1-hour time frame that there was a new wick opening gap. Earlier in the morning, I saw this new wick opening gap here. You could see this was new wick opening gap after price came back and filled it up. So every day this happens. End walk. If you don't know what an end walk is, make sure you check my YouTube channel. There is a video on that. Just type end walk. You will see everything about it. It is called new wick opening gap. So after that, I decided to go to the 15-minute time frame with my simple trading strategy that I call the London kill zone strategy. All right. A very, very simple strategy. And look at what happened on this particular asset. It happened to be at that exact point that price, this was the Asian session. Asian session is highly important for you. This was the Asian session. I saw when it came, I saw price actually swept liquidity in the Asian session on DXY right here, filling up this gap. A very powerful correlation, confluence that anyone could use. So the ideal thing to do if you see price sweep liquidity below Asia is to look for a shift in market structure and entry. Then you go bullish. That was the same thing I did. So I went to GBP USD because I checked a short correlation on Euro GBP and I discovered that GBP is better for taking the trade. You could use GBP USD for the trade. So I came here with the community members. We did this analysis together. So this was what I saw when price was somewhere around here. So I saw price actually move above this area, sweeping liquidity, clearly seen. All right. This was liquidity and it left this order block mitigated. It mitigated this order block after sweeping liquidity. This is everything you need when it comes to price action. It went to this order block after shifting market structure or breaking structure below this area. You could see break of structure to the downside. Price came to this Asian session trying to create the power of 3 concept: accumulation, all right, which is a range; manipulation, which is a fake out or a Judas swing; and distribution, which is the proper movement of the market. So everything is working hand in hand. So guys, you could decide to watch some of these videos on my YouTube channel. There is absolutely no video you will look for that will help you that you will not find on my YouTube channel. So kindly subscribe and then watch all the videos. If you come to playlist, you're going to see all the kill zone strategies, the power of 3 concept, everything is here. So the power of 3 concept was what I used: sweeping liquidity, accumulation, manipulation. And then we were watching this trade with these guys together. And some of them were actually skeptical about the trade. They were looking at this. Let me show you. They were looking at this liquidity void above. But then me, I was actually looking at this area, this liquidity point. Can you see this low? I was looking at the sweep of liquidity that could come in this exact point. That was what I was looking, and then they were looking at price retracing back into this area. So let's get to that point where I finally took the trade using the balanced price range. Balanced price range is simply a simple confluence between two fair value gaps on each side of your chart. Let me show you. There is one right here on the 4-hour time frame. Look at this. Can you see a fair value gap here? Let me show you. This on the right hand side. Is this a fair value gap? Yes, a fair value gap. Now if you look by the left hand side, there is another fair value gap. This particular one. So if you have two fair value gaps that are overlapping on each other, this particular point is a very, very powerful confluence. Price will just touch the area and boom, it crashes. So this is what we call balanced price range, BPR. This is a type of an entry model ICT called Institutional Order Flow Entry Drill, IOFED. So this is what ICT calls the IOFED. When price uses this area, you will see how powerful when it comes to the confluence, especially the smaller fair value gap. One is big, one is small. So this was exactly what I used for this trade entry. All right. I hope you're watching everything I'm doing right here. So when I saw this happened, I saw the sweep of liquidity. I came to the 3-minute time frame. I told them that this is it. This was the shift in market structure we had right here. We have the shift in market structure because once you have the sweep of liquidity, the next thing you need is a market structure shift that will tell you price is going to go lower, because this is an uptrend. If you see shift in market structure, it means it is now a downtrend. And then I saw the balanced price range here. Let me show you. Can you see this one? Balanced price range came in right here. And that was where my confidence came. And this is the other one. Can you see? A very big fair value gap and then a very small fair value gap. I was the one that told them that if price comes here, we need to be in this trade. Before the trade even started, that was when I told them. So we were watching it, and you know, sometimes you need to be patient. You need to watch out what you're doing. You need to believe and trust in your analysis right here. Could you see this? After I've done my risk calculation, everything. Okay, I actually put the stop loss above this bearish order block. All right. And it was somewhere around 10 pips stop loss, I guess. Yes, 10 pips stop loss. And we were targeting almost 25 pips or 26 pips. That's basically 1:2 risk to reward ratio. So this was the trade. And we were watching it together. It was a live analysis we did. And when I saw price came, you see, when I saw this massive bullish retracement, I did not enter the trade. I asked them to hold on because this was an aggressive pullback. If you've not watched my video on aggressive pullback and corrective pullback, you need to watch it. So this was an aggressive pullback. I said, no, not yet. Give us a sign in the 1-minute time frame that the buying pressure is dying, And that was why I went to the volume indicator to check the buying pressure. So when I saw the buying pressure dying on the volume indicator, I saw it. I said, okay, this was when I finally called out the trade for them. And then we took the trade. And you could see, and it was a positive trade. All of us made money and we were all happy for making the money. All right. So this is the balanced price range. Notice how price came to that exact point. You see, the balanced price range, price came and boom, we had that particular entry. So this is the lesson for today, guys. Balanced price range entry. If you want to see more of this analysis every day, make sure you subscribe and you turn the bell notification. Thank you guys for watching. See you in another video.